Stephanie Thomas.
And I'm Mary Thomas.
Of Thomas & Thomas PC. And we're the Sales Tax Sisters. Thank you so much for finding us on YouTube and clicking on the video. We are sales and use tax consultants based here in Texas. And we normally liaison. One of our big things is we liaison with the controller's office to help businesses when they're being audited. And we want to talk about one of our favorite topics right now, which are audits and audit hot topics. What you should be doing and the 5 big gotchas, and sometimes it might be more than 5, that we've noticed dealing with customers as well as auditors. So the first thing that we want to talk about is invoicing. Your invoices are very, very important. They tell the tale of your business. They let everyone know what you're selling and if you're charging tax and that sort of thing. What we have found a lot lately is that people's invoices aren't saying anything. And when I say they aren't saying anything, they're not very clear. If you're selling a widget or if you're selling a pen, put on there you're selling a pen on the invoice. If you're selling a security service, put on the invoice you're selling a security service. Internal code is not going on the actual invoice, is not going to be clear to an auditor or anyone else reviewing that invoice. And auditors need to know exactly what you are selling in order to determine taxability, and that is especially important if you are selling a service.
The thing about it is that you always want to remember when you're being audited, that auditor doesn't know your business. You want to make it very clear as it relates to what it is you're selling, especially if you're in a situation where you're not taxing something, especially if you're making the representation that something is not taxable. You want everything to scream that it's not taxable. You want it to walk like a duck, quack like a duck, look like a duck, so that an auditor will look at that and say, hey, it's a duck. You don't want questions. So I always tell people, especially as it relates to things that you are not taxing your clients on, make it clear what you are selling so that an auditor can go in there and look at it and say, oh yeah, that's right, they're selling water, at least in Texas. It's not taxable. And they can push on to the other thing. If you make it look like if they have any question as to whether it's water or soda or Gatorade, you're going to have a problem.
Exactly. Ambiguity is not your friend when it comes to your invoices and your contracts. Make sure that your records are very, very clear. Another gotcha is company credit cards.
Oh my gosh.
Yes, company credit cards. Sometimes you have companies that issue credit cards to select employees, and those employees do not provide the appropriate backup.
Or the owner, if you're the owner of the company, oh my God, you want to make sure that you especially, and make it so that everybody in the company knows, if you went to AutoZone to get an auto part, we know AutoZone charged you sales tax. We know Walmart charged you sales tax. But we have been running into auditors where if they don't see that invoice or that receipt, because it's not even an invoice, that receipt that says that they charged you that 25-cent sales tax, they're going to charge it again. And what can happen with that is that if they're doing a sample and projection, that 25 cents can be a whole lot more than 25 cents.
Exactly. Some people have materiality thresholds, the accounting department, and say, listen, if something is below, a purchase is below a certain amount, you don't have to give us a receipt or invoice or anything like that. Make sure you're very careful when you're setting those materiality thresholds, because just like Mary told you, sometimes audits are samples and projections, and they're going to be looking at your company credit cards and seeing, okay, well, I see charges here. Where's the underlying documentation? And if you're not able to provide that, they will set that up on an audit, and depending on what the population base is and what the sample area is, that can turn into some big, big money.
And there's something that's really great that companies are doing now. I know, for instance, Home Depot does it. I'm in there too much. You can tell them you want a receipt, but you want the receipt emailed to you.
Yeah.
You can do that. And if that's a choice, I would always say do it. Same thing with Office Depot. You can have that email to you. And as long as you're not one of those A-type people, and I'm not, it's going to be there a couple years from now if you don't have it in your hard file. Be careful of receipts that have disappearing ink. We run into that a lot. Nobody cares if you went to Chick-fil-A or wherever your favorite food place is for lunch and you put it on the company card. We don't care. The controller does not care.
No.
What they want to do is they want to see that you paid sales tax. And there's another thing about that. And that is there are a couple credit card companies that will issue the statements and they will show whether you tipped somebody. But they don't show whether or not you paid sales tax. Don't think that those statements are covering you, because they, and a lot of times, don't.
No.
And when you take your client out to a nice restaurant, grab the right receipt. The right receipt is not the one that says you paid $60 and then it shows you left a $10 tip. That's not the right one. The right one is the one that says you had the crab salad, he had the steak. It puts down to the 8.25% or whatever that tax rate is. It shows the tax. That's the one that you want.
Auditors are always interested in source documents. And source documents are the invoices, contracts, things like that.
And the receipt.
Yes, your statement is not going to cover you when it comes to proving the correct tax treatment of something or that you paid sales tax. You need the receipt or the invoice.
And that leads into the next thing that's on the list,
which is
your personal expenses in with your business accounts. This is just kind of a little bit of an offshoot, but it's a really important one because there are a lot of business owners that will run certain expenses through business accounts. We don't care about that. The controller doesn't care about that. When we come in and we're looking at your records, what we're trying to do is prove to the state that you paid the sales tax. So it's always easier for us if you don't do that, because because it can be difficult to kind of say, well, this is this person's child's tuition, you know. And we've seen that, and that's not a big deal. Like I said, we don't care. But there are some times when it can be a gotcha, because if you go in and you are running your child's books, their school books, through an account of interest, they want to see the tax on it. I know that, and whereas if you put it on a personal account or something that was not linked to the business, this auditor wouldn't be looking at it at all.
The same thing sometimes when you have recurring monthly charges. Like, you put your storage or your telephone or your cable on the company credit card because, hey, it's your company. You want to run your expenses through that, your personal expenses. It's your business. No judgment, people. So, but the big thing is if those are recurring charges that are happening on the company credit card, the auditor is going to be looking at that, and they want to make sure that sales tax was paid if it is appropriate. And sometimes you run into, well, it's a monthly recurring charge. I don't necessarily have the backup for that. I don't have the source document. I gave them my credit card and I charged, and then that's just it. And that's all well and good, but you're gonna have to get that underlying source document, that invoice from that vendor. And in Texas, the statute of limitations is 4 years. Now, that's not true for all jurisdictions, but typically
it runs 3 to
4 years if the sales tax statute of limitations across the country, usually if that jurisdiction has sales tax.
And there's no finding of fraud.
Yes.
They can open it up if there's a finding of fraud, but fraud's kind of rough.
Yeah. But the big thing is just note when you're running your personal expenses as a business owner through the company, that opens it up to scrutiny by the auditor, and they will probably want underlying invoices.
And now I know there's one thing that somebody called me up a couple of weeks ago and said, we're being audited, and the auditor is telling me that they want to see my boss's personal his personal financial information. because he was running different things through different accounts. And she was like, I shouldn't have to provide this person with this because it's not related to the business. And this auditor told her, and they have the perfect right to say it, if you don't give me his personal stuff, his personal records, because he ran these expenses through the business, I'm just going to schedule him personally for an audit, and you'll give it to me then. And she asked me, well, what can I do? And I said, give her the stuff before she generates an audit on that man. Because there's nothing you can do. They have the right to look at all of it.
Which leads us to another big gotcha. Don't make your auditor hostile towards you. Yeah. They have a lot of discretion as it relates to materiality thresholds, how many hoops they make you jump through to prove something. So the rule of thumb is, and I'm going to sound so southern when I say this, act like you have some home training and you have some sense. Do not cuss out the auditor. Do not throw things at the auditor. Do not ignore the auditor.
Be responsive.
Be responsive and be respectful. And understand that even if you don't agree on the taxability treatment of something, or you think they're just crazy trying to set up all this money on your audit, they don't have the last say on anything. If you don't agree with the audit results, you have a whole process you can go through where you can explain why you don't agree with the audit results. But the big thing is, one, if they ask you a question and you don't know the answer to it, don't lie, okay? Just say, I don't know the answer to that, I'll get back to you on it. And then just be honest. If they ask you something about a taxability treatment and you got it wrong, admit you got it wrong. They know anyway, they're going to know you got it wrong. So just admit you got it wrong. I'm not saying that you need to do their job for them or highlight different areas. If they find it, they find it. But don't hide things. Don't be dishonest. Don't be hostile. It is not your friend. Act in a professional manner.
And don't be dismissive. Don't be so nervous, because a lot of people aren't rude to be rude. I mean, you run into a weird situation every once in a while, but a lot of people aren't rude to be rude. They don't know. They're nervous. They're swamped with other things. And so you tell the auditor, I'm going to get back with you, and then the world blows up and you're dealing with that fire and you're not getting back with this auditor. Meanwhile, that's fanning a flame. That's going to be on fire too in a way that you don't want. So just really be honest with yourself, and this is really important. At the very beginning, do you have time to deal with this person?
Yes.
Do you have the kind of temperament? Because some people don't have the temperament to deal with an auditor or to deal with the process, period. Because we get people who are upset with us because it's taking too long.
Yes. And we're like, we've done all we can do. We're waiting on the auditor to get back with us, because audits can take some time. I mean, when you think about it, they're dealing with a whole lot of different taxpayers. Your audit is not the only audit they're dealing with. So it takes some time sometimes. And
everybody's system is different.
Everybody's system is different.
They're going back 4 years.
Mm-hmm.
So I'm not going to say that no news is always good news, because it's not. But the thing about it is that you really do, it's a process, and you really do have to respect it.
Yes, and you have to not only respect the process, respect the auditor too.
Yeah.
You know, don't act like you got some sense and some home training, and understand that if you are wound so tight that you know in and of itself, you know going in that you do not want to deal with this person, you don't want to talk to this person, you don't want to listen to you don't want to be responsive to their requests, really consider hiring someone to represent you.
And if you do that, make sure that you hire somebody who's going to respond to you.
Exactly.
Who's going to respond to that auditor.
Yes.
I met a really nice man who told me that he hired someone and he saw how that person was so ugly to an auditor, and he immediately got rid of them and apologized to that auditor. And it was the smartest thing I've ever heard somebody say. He was very smart. He's a very nice man. But not only was he a nice man, he did the best possible thing he could do for his business, in that he retrieved that relationship on a professional level before it just went left. So right now we told you it was a top 5 video. We've done 4. So we talked about your invoices need to say what you do. We talked about the credit card situation. We talked about running personal expenses through the business and how that opens them up to scrutiny. We've talked about making sure that your auditor isn't hostile towards you when you can avoid it. Last thing.
Yes, accounting systems that don't talk to one another. And I've noticed this sometimes, especially with construction people, where they may have their construction and job cost stuff in one accounting system, but they have the actual accounting records in a different accounting system, and those two things don't talk to each other. Just be very, very careful when you do that. Ultimately, we would all like everything to talk to each other and everything to run so smoothly and everything like that, but sometimes it doesn't. When you have those instances, just make sure you double check your numbers, and especially when you have to input things from one system into another, make sure you double check everything to make sure that things are accurate, and just know that that's an issue there. And with audits, the big thing is right now, what I've noticed is that the auditors want electronic records, and they request that a lot of times. And so just make sure when you're getting accounting systems that you are able to provide that electronic records, because even though the controller doesn't tell you how you're supposed to do your business, if you do certain things, it makes it more difficult for you. Okay?
And make sure that when you're buying your softwares and you're working on your systems, that everything flows through the way that you think it's flowing through and the way that you think that it should. Every once in a while, we'll do an audit of a system and someone will say, well, is it flowing through the way that it should? And sometimes I'm surprised to say, no, it's not. It's not flowing through the way that you think it is, the way that you think it's mapped. Yeah, the way that you think that it's mapped. It's not mapped that way. So just buying the software is step one. Then implementing it is the really big step two. But then step three is maintenance. It's just like having a house. Every once in a while, you got to power wash that sucker so it looks good. You have to go through, pick some transactions, and follow them through your system to make sure that they are mapped and that they is operating the way that you think it is.
She mentioned the power washing because she just got her house power washed, and it looks really, really good.
It's really good.
It does look really good. But I think those are the top five big gotchas. So anything else you want to add?
Nope, that's it.
Yes, thanks so much for finding us on YouTube with Sales Tax Sisters again. And please subscribe if you are interested in subscribing. We always love subscriptions and we always love feedback. Thanks again for finding us, and
thumb us up if you liked the video.
Yes, thumb us up if you liked it. Thank you again, and have a great day.